Welcome to SpeedyPodz Episode 5.
Great to be here.
Today, we're cutting through the noise, bringing you the most impactful business and AI news straight from the latest reports.
Yeah, think of this as your fast track. We're pulling out the key insights, especially where business meets AI.
Exactly. So let's just jump right in. Kicking things off, some really big moves in the chip sector today. Broadcom. Wow.
Oh, yeah. Top gainer in the S&P 500. What was it? Up over 16% at one point intraday?
That's right. And the big news seems to be this report that Broadcom is actually helping OpenAI.
Designing and producing a new AI accelerator chip for them, targeting 2026.
And the order size is just massive, potentially over, what, $10 billion?
It's huge. And, zooming out a bit, Broadcom's stock performance this year, it's actually pretty interesting, up 44%.
Which is kind of surprisingly outpacing NVIDIA's 25% gain this year.
Exactly. And you see OpenAI clearly broadening its horizons supplier-wise. It's not just Microsoft anymore.
Right. They're bringing in Oracle, CoreWeave, Google.
Which seems to have directly hit NVIDIA, right? Their shares dipped about 2.7% on this news.
So I guess the big question is this AI chip landscape getting maybe way more competitive than we thought?
It certainly looks that way. You'd watch for more big tech firms doing their own chips or like OpenAI just diversifying who they buy from. That'd be the signal.
Okay, so that shift highlights competition. And speaking of competition, Google's antitrust case had an interesting turn.
Yeah, they were found liable, but the remedies weren't nearly as severe as some expected.
Right, the judge didn't go for spinning off Chrome or Android.
And the reasoning was fascinating. The judge specifically pointed to intense competition, especially from, well, new AI players.
Like OpenAI and ChatGPT?
Precisely, saying they're diverting user attention, billions in revenue, essentially arguing the market itself is disrupting Google's core search business.
So pushing Google towards being more of an AI chatbot or like an answers business?
Exactly. So the market's kind of doing its thing. It really makes you wonder, how fast can new tech really challenge these giants and maybe even change the regulatory chat?
It's pretty incredible, yeah. Seeing market forces maybe doing what regulators find tricky. Okay, so from tech disruption, let's pivot a bit. Lululemon.
Oof, yeah, that was a rough day for them.
Shares down as much as, 18.6% in one day? And year to date, it's like 55, 56% down.
And this is a third straight quarter they've had to cut their outlook. It's not just a blip.
So what's going on there? Is it just one thing?
Well, it seems like a combination, really. You've got weakening demand, sure, but also tougher trade policies.
Ah, like the end of that de minimis exemption.
Exactly. That apparently adds up to a $240 million hit for them. Plus, just more competition in athleisure generally. And maybe even some product selection issues, like missing the shift from leggings to wide-legged pants, maybe.
Interesting. So it really challenges that idea of these sort of untouchable stocks, doesn't it? Highlights real structural issues.
Absolutely. Even strong brands aren't totally immune to shifts in taste, the economy, or policy changes.
Okay, let's look at the broader economy then. The latest U.S. jobs report. Kind of mixed signals, wouldn't you say?
Yeah, a bit softer than expected. Only 22,000 jobs added. The expectation was closer to 75,000.
And we saw full-time jobs go down while part-time went up. Plus, this ongoing pattern of downward revisions to past data.
Right. The data reliability is something people are watching, but, context is key. Unemployment's still historically low at 4.3%.
True.
And looking ahead, say, to 2026 and beyond, there are actually some pretty bullish factors people are pointing to.
Like what?
Well, there's an estimated $8 trillion in new investment plan for the U.S. The AI boom is driving huge data center and manufacturing growth, plus the expectation of interest rate cuts eventually.
Okay, and you mentioned tariffs, too. Those are often controversial.
They are, yeah, unpopular with some businesses. But they are generating revenue, maybe $4 trillion over a decade, some estimate. And they seem to be spurring U.S. manufacturing investment, especially with incentives like 100% depreciation.
Allowing businesses to write off equipment costs immediately.
Exactly. It's a complex picture. But those long-term investment trends and the AI factor are pretty compelling counterpoints to maybe a softer short-term jobs number.
Okay, one last thing, and this one's really interesting for the financial world. MicroStrategy.
Ah, yes. The company that just buys Bitcoin.
Basically, yeah. And get this, they're being considered for the S&P 500 index.
Because that huge unrealized gain on their Bitcoin holdings, what, $14 billion, it actually helped them meet the profitability criteria for the index.
So what happens if they actually get in?
Well, that's the kicker. All those passive funds, the ones that just track the S&P 500, they'd essentially be forced to buy its stock.
How much are we talking?
Rough estimates are around $16 billion worth of shares they'd need to pick up.
Wow. So investors in standard index funds would suddenly get like indirect Bitcoin exposure.
Precisely. It's a really fascinating bridge between crypto and traditional finance being built there.
Yeah.
Really groundbreaking for the mainstream.
Incredible.
It really is. And, it brings up a broader point, doesn't it? As technology, especially AI, keeps moving so fast, changing markets, changing business models, how do our traditional economic yardsticks, our regulations, how do they even keep up? Something for all of us to think about.